Still like for a few more minutes.
Yeah, sure.
It's still early.
So there's more people than in the inauguration.
Last time we launched the journal, it was thin attendance. I
But
guess
then there were people online. too.
online there were a number of people.
People are
I think we need to put this on YouTube.
I think so, Dr. Lee, this is going to be recorded, right? So it can be viewed later.
I think so. I'm sure they will. They will come.
How's things in Singapore? Okay.
It's live and recording now. And then it's recorded at the end.
Yeah.
So it's not-
And then we can get a lot more viewership. Are we going to, Dr. Lee, are we going to make the presentation here? Or we just go up there for the talk?
I think that's in here. Oh, yeah, you see it around. You see it around.
You just don't hear.
Yeah, that's why we have the camera.
The slides.
Yeah, you'll be through.
We can do the presentation, that's it.
That's nice. That's a new.
And then we can move the slides.
We can see next.
Someone will be there too.
Do we have a pointer for the slides?
Oh, yeah. The last time we had all of them.
It's not like
Yeah, I think, yeah.
It was good. That's the language for you. You know what it
It's supposed to discuss something paper, some never said links. And I think we don't start discussing.
I said all the your mindset, you know, this mindset, no.
But you can always provide comments based on this presentation.
Okay. I like the fact that Bob is saying on the right side. Yeah. All of the time.
Last time I had this conference in
30 minutes, right? And then we
means the visa.
Yes, sir. Oh, the Wi-Fi. Yes, the second one, we discussed, you know what, you may want to, yeah, because you know, you find yourself, you may discover that you can't cover your box slides, which is my biggest worry. The last slide is this one, right? And also we have exercise cover, right?
And on the last slide, it's reflecting all the fun of lines.
And also, the could also play.
Yeah, I think that we can just make another 10, 20 people. It's a 10, 20.
It's like one leg of it. So then after your right?
Even nowadays, even what you call nowadays, even the evaluation of
It's coming, but a lot of people something. Yeah. So she's don't have all the restaurants.
For DD. Is he joined the Sanch?
Because he was driving.
What's the time now in Pakistan? 12.
Well.
Again, message.
Doesn't matter. I can be my own discussion. There's a lot to talk about. Okay, when will your library be completed? When is your library going to be completed?
You mean the chain?
Yeah, what scientific?
Maybe that's that.
Yeah.
Probably another weeks.
Quite soon.
No, because actually you see from here downstairs,
Yeah, yeah.
also use space and use space. We want to put in some things in the hall so that people can sit inside.
Always sit and study.
Or study on Zoom meeting. Because sometimes otherwise very complicated and difficult.
Private.
Chemical, yeah. But then the library do set up around there. Some.
Okay, Dr. Shah is on.
Science, yeah. That's
Assalamualaikum.
cool.
Am I audible?
Really?
The voice quality at your end isn't very, I can't hear you very well. Not very effectively, but can you hear me? Okay.
Clear.
Okay. Great. I think can you speak one more time so we know the voice quality from your end?
Can you hear me now and clear?
There is a distortion. There is a distortion.
Let's see whether we can do it.
Let's see if we can improve it.
How about that?
Any improvement?
Yes. I think I'll make do for now. Let's see how it goes as the session progresses. But good, at least I'm audible, so that's good.
You can start. Maybe change by the rest and see my.
Okay, the rest of it. Okay.
I think here. We want it here.
Hello. Yeah, I think this one can.
It's unfortunately it's not clear. No.
It's all very clear, right? Clearly.
The video is very clear, but unfortunately, the voice quality.
Here we are after 7 months of the launching of our, I believe it was 17, right here at ground floor. And now we are meeting again. But today, I think the occasion is bigger, grander. We are blessed with more. Charlie can join us all the way from the UK to provide from himself. Myself, also currently and in Singapore. And we cannot forget World Scientific, and for giving this platform, system, and also our colleague giving me information of joining us because of some technical issues. So we're very happy from here. We will not need to ask a number of significant questions. We ask what for making things better for all of us. So here we are. We have two events back to back. Today we have a roundtable discussions with all of you. We have three papers that we presented today. And then tomorrow we will have our first annual Islamic Finance Symposium. So all these things will never happen without the support of first World Scientific and more importantly our young brother here, Ridwan and his team, Islamic Finance Singapore Limited. So again, thank you so much for this opportunity. So I'm very happy that all of us are here and we listening to the presentation. The format is very simple. We'll have paper presentations, 20 minutes, and then followed by a discussion. And then we will open to audience for questions and 30 minutes. Okay. If you want extra time,
I will get it 30 minutes.
yeah, 30, yeah.
By the way, I personal feedback from overseas, the voice cannot be heard. The same in the doctors are there. They can't hear us. Yeah, they're not just Pakistan.
Is it getting any
I still can't hear you. Almost gets better and then it gets bad. So keep on going. Hopefully, it gets better.
So what the activity we would like to invite the one to give this up.
Hello. More than 50 journal in different areas. Format and makes it any review of some each one of the other articles and can be also university subject of one of the very important journal, and we are putting more effort. Yes, and we are hoping that at the same time that we can look at China journal from China. Yeah, China is probably the biggest market now for academic journal. So since we have office in Beijing, Shanghai, Hong Kong, and Taiwan, so we are hoping that this every different city in China to do our academic mission. Thank you.
Thank you so much, Mr. Kwon. As the editor-in-chief, one of them, the Saran and Popular, we always get together and try to plan out, the future for this journal. I think the support of all these great scholars, I think we can bring this journal to the next level. So we again appreciate your continuous support. So now we come to the answer. from three distinguished professors. So let me start with quick introductions. I mean, it doesn't need introductions. Bila was a professor at NUS for 30 years before he got himself for 5 years. And now he's actually, in the it's one of the ideas that understand or you want to present?
Yeah, maybe I understand you can also understand better here. So, yeah, it's my presentation. And here I go off to try to page maximization. Buzzword profit maximization. It is exactly opposite. And you wonder how can I conceivably justify this? Okay, so here's my day for this. Next, please. So here's how I'm going to label these items. Provision. Just these will be and discussion. So I'm going to be in some detail. These next slide, please. So here's some references. I want to connect this reference. Here is a very important reference. We studied the last 3 years for me and 2 young colleagues. For the case of the US macroeconomy, this model is extremely accurate. The putting it today is here. It is amazing that this is that should results of so you know the legal mindset. If you check with the economists, I said you know it's all humility and for any arrogance. Economists in Ivy League to me, I hold the contempt. Mister, why such a harsh word? The reason being that they are completely bought into the framework, the capitalism rules, property maximization of mass capital must always expand at any cost. And with this framework, all these theories are formulated. So, you know, okay, they have some mathematics, but from physics point of view, the mathematics is elementary. You don't impress by it. So basic comes out. I don't want to buy into their view because you see from today's talk, Islamic economics is radically opposed to it. Islamic capitalism, I can agree with that. So with that, here is the reason why. Let me start with the Holy Quran next slide, please. So here is this next one. So here is a key words, a single word explain the whole economic system, and that's the beauty of the Quran. A single ayat can tell you volumes if you are willing to unpack it. So I started for 4331 is the contextual between the day. They, right? So they say, why was the Quran revealed to some great man of the two towns, referring to the Prophet? That he was some small player by him. So then, you know, the response is a very interesting response. They say, is it they who function the Lord's mercy? This mercy is a very interesting word because it refers to this, also to what follows. So one mercy is that he's revealed the book to the Prophet. The other mercy is that he says, we have a portion which means given out among them. This is the people. These people are not necessarily bad, they're just people. Their livelihood in the life of the world and raise some of them above others in rank, that some of them may take leave of others. And the mercy of their Lord is better than the wealth they amass. An amazing verse. Okay, let me try to unpack it for you. Okay. First, it is the Lord of oceans. Physics in Arabic livelihood. Okay, whatever sustenance we have in this world has a divine source. It's coming from there finally. We have to realize that. Second thing, it is absolutely key to my whole talk. I put it up here. Our Lord raises some individuals above others in rank so they may take labor from others. You may say, we are taking labor, what's the big deal? Every day I see that. No, this is an extremely modern statement. I'll tell you why. Subsistence farming, even a few hundred years ago, was entirely based on a family engaging in agriculture, no giving and taking labor. The family shares labor, and they give a part of their product to the landowner because they use his land. And the landowner had also, tax collectors and, all the kinds of armament and all that. So there's a lot of superstructure landowner had, not linked to production. So here, taking labor is immediately talking about something, an economic system which needs a combined effort of many people. Then, without taking labor from others, you can't organize a massive system based on the collective effort of many workers. So this taking labor is completely founded on a massive economic system with lots of division of labor. In particular, some take labor, some do labor. Okay, next please. So the Quran says permission is given for taking labor of others for providing livelihood for life in this world. Look at how explicit the verse is. It's livelihood for life in this world. You could say, I have livelihood for the akhirah. Okay, I'm happy with that. No, that's not what it's saying. In this world, you're getting livelihood. But this process, the mechanism is some take labor from others for the sake of providing livelihood. So here's my reading of it. It's fundamental to my own talk. Hence, one may conclude that the purpose of an economic system based on the labor of workers is to maximize the means of the workers' livelihood. To me, it is completely clear, okay, that this is permissible. Because, now discussing with Dr. Saad many times, is taking labor from others is the foundation of Marxism. In Marxism, the whole idea, the moment you take labor from others, they unpaid wages, and that's the source of profit for the capitalists. They call it surplus value. So taking labor from others is absolutely linchpin of a modern economy. But the Quran says if we take it for livelihood, there's no exploitation. Interesting, very interesting verse. And then the amazing sign off, he says, and the mercy of their Lord is better than the wealth they amass. Amassing wealth is cautious, deviating from receiving the Lord's mercy. Profit maximization, what's the purpose of it? It's to amass wealth. You don't profit maximize because they love the word profit and maximize. The purpose of profit maximization is what? Is amassing wealth. And he's warning you that don't go on that road. You'll miss out on the Lord's mercy. And then, of course, a lot of other things will happen also. So profit maximization, which is perfect, is not allowed. Private capital owns enterprises based on taking labor from others. Since the means of livelihood of the worker are the wages, what are the means do they have? There's no other means. Not profit maximization, but it said maximization of workers' wages needs to be the foundation of private enterprises based on the Quran. The very interesting and to me a key view that the ayat, in my view, completely supports. Okay, I'm willing to discuss with others. I looked at the other Arabic translations. Translation is very accurate. Akhada is the key to take. Okay, so here we have it. And I'll come back to private capital later at length, explain. So when you ask, well, how will you maximize wages? It's nice to maximize. So it comes back to a khutbah I heard in NCF once. The Friday prayer, and some Imam said that there's too much profit was being made and they're making people poor. So I went to the Imam. Later I said, Imam, what is the right amount of profit? 15%, 9%, 17%? Tell me. Too much, too less, it means nothing. So then it's when I realized that no, this has to be given a quantitative basis, mathematical basis. And that is what this macroeconomy will do. So this model, which I mentioned to you, has been tested for the United States. I basically set interest rate to 0. Basically customized it for Islamic finance. And then you have, I don't know, most of you may be familiar, but in macroeconomic, it basically is the entire economic system is simplified into exogenous and endogenous. Exogenous means factors that are not controlled in the microeconomy in the level of firms. Endogenous means the microeconomy, wages, capital, and all that, how they're affected by the exogenous variables. So they're basically a few variables which are capturing the work of hundreds of billions of people, if you like. Okay, it's a good approximation, but it's the start of the macroeconomy. So here is the exogenous variables, government expenditure, money supply. Endogenous variables are wages, capital employed, and rate of profit. This is a key which is missing in the books written by Ivy League economists in the West. Okay, the rate of profit never appears in the book. They have rushed it out for reasons that they invest. And just to tell you what is it there, the rate of profit is exactly what you expect. It's the net increase in wealth of society with the cost incurred. Cost incurred is wages plus capital. It's here for reasons that are technical. And here is the excess GDP, is the total product of the society. And this is the cost incurred. So this is the definition of rate of profit. I put it down on record to show you that precisely defined. So next please. Here is the model. I call it Sraffa-Keyes equation because I was inspired by Sraffa to look at rate of profit as part of the macroeconomy. That's why I acknowledge it. But in Keynes, the profit rate of profit doesn't exist. Okay, he's just mainstream capitalist economics. I mean, he has his own ideas, but not bad. But that's it. So Sraffa is here to remind you about pi. And here, my basic. You can say, why did you propose this model? Okay, where did it come from? My idea was very simple. The two basic factors driving human economy is labor, human labor, and capital. That's it. So I said, look, let me structure the model so these two factors occupy the front seat of the model. That was my idea. So here it is. These are I'll just come in a minute, these parameters which have to be evaluated. The GDP, WA, wages and capital, and money supply, same thing. Now, what makes things incredibly complicated, and it comes back to a discussion I had with Dr. Saad, he kept saying, is rate of profit exogenous or endogenous? And there's arguments of both. Okay, there's arguments exogenous, endogenous, but in this model, it has to be endogenous. And then I'll discuss in my paper. When you make it endogenous, you hit this incredibly non-linear structure because pi appears in the coefficients, but pi itself is a function of wages and of money supply. This incredibly entangled, non-linear algebraic equation. You can only solve it numerically, but you have no choice. Now, these coefficients here are parameters that you get from the data. So, next, please. So these are parameters. These are constants of the economy. They hold the secret of the economy. So if you want to compare China and America, you can use a model on both. And we are using it actually. These are vast economies, so a lot more work has to be done. But you first start with a closed economy, then you move to an open economy. Because open economy has exchange rate, foreign trade, balance of payment, a lot of new things coming. So I want to tell you how it's discussed in my paper, and I have submitted. We solve the equations and find W and pi and G the function of G and M. This is what's called a solution of macroeconomics, in case this terminology is not familiar to you. You solve the equation. Now you can say, well, why did you go through all this effort solving it? What do you want to get out of it? Next, please. Get out of it what you're looking for. Next, please. Maximization. What do you mean by maximization? There's a very precise mathematical definition. Just look at this curve. Okay, look at this curve. This curve is a maximum. That's all it is. Simple as that. What is this? In our case, there's two dimensions. I didn't want to draw a surface, very complicated. Government expenditure is the wages. We are looking for that government expenditure for which the wages are going to be maximum. So in this case, it's about 0.5. We look at this as approximately 5. So we're looking for that value of G, which will give you the maximum value for the wages. Red plot. How do you find it? But the differential equation, yeah, you maximize. If you know some the slope is here, slope gets to 0 here. When it hits 0, it's called a critical point. You have two of these, because you have two variables. And this solution is absolutely non-trivial. It's in my paper. If you go to want to see the nice math. It's quite formidable as you go there. But in the end, you come out with what you want. You find the critical point. The moment you find the critical point, you find the maximum wages. And in the wash, you get a huge bonus. You also find out the rate of profit of the macroeconomy, which maximizes wages. I mean, this is amazing consequence you'll see later on. to me, it came as a surprise, like I kept sending drafts to Rahimi and to start saying, sorry, the more I study this, the more I find I have to do things again because this I didn't realize it, only when you started. And the math is quite simple. This is algebra, there's nothing complicated going on, which you must know how to apply it. Next, please. So I have this now, so you can say, okay, you have it. How are you going to realize the maximum wages in the microeconomy? Well, clearly the first thing is that we lock in minimum wages for every sector. So you have to make approximations. I mean, approximate that the average size of labor employed is L, the number of firms is N times L, the total number of workers. I just divide this. The first is the minimum wages. Then what you can do further, you can actually have a component of wages which depends on the profitability of the firm. The wages are shared in the profit of the firm. You can say, well, which capitalist, which entrepreneur ever agreed to all this? That's a separate question entirely, okay? I will address that also. I addressed it in the first article of macroeconomy that I wrote. But that's a separate issue. The point is that this can be mathematically realized. Okay, so clearly we are very far from profit maximizing economy, okay? Very far, although we have private enterprise. Next, please. So here's the Islamic microeconomy, this books are written on it. I'm just giving you So microeconomy is simply a collection of private firms which functions in the economy. So this we discussed last time, the opening of the journal. In the microeconomy, whether it is capitalist, social, whatever kind of call it, social market economy or Islamic economy, the private firms look the same. They're different the moment you go to the macroeconomy. The macroeconomy defines the goods and the parameters for the market, for mobilized capital, for the functioning of private firms. The macroeconomy is where the difference of the system lies. When Islam allows ownership of property, it allows wealth also. But even ownership of wealth is conditioned on no hoarding, no immoral expenditure, no squandering, all this constraints of given. It doesn't exist in a capitalist economy. Ownership is absolute. Okay, so here it is. The first and foremost, you realize the way we have positioned it. Wages are the key to providing sustenance for the workers. And these wages have to be maximized. That is the key to the microeconomy at the level of firm. Next, please. So what are the firms? Yeah, I have really, this is, this what we call a very crude approximation of firm. But it turns out it's pretty accurate. All discussions of microeconomy start with this equation. It's very simple, right? The area of revenue based on workers, L of them, and the deployment of capital K. So you have cost of production, which is wages you pay, and the capital you employ, and you produce quantity Q of product, which sells the market price P. The revenue PQ. But here is your gross profit. All this caveats about tax is that those are all refinement. This is the basic idea that you have cost and you have revenue. The difference is gross profit. Very simple idea, and this idea I repeat many times. Nothing deep about this, but very important. There's a famous cost-plus formula which works pretty well, which quantity Q also, of course, depends on the labor you employ and the capital, but also the technology used, which is alpha here. Okay, so there's a lot implicit in this parameters, which I'm not telling you how they are generated. But if you do macroeconomy, it will generate these parameters from your understanding of the firm. So here is the rate of profit of the firm, unconstrained. And I have to remind you, there's no constraints on this entrepreneur. Okay, he produces, he takes whatever he gets. Next slide, please. Now the macroeconomy is going to be imposed on the firm. Okay, so we say, look, we know that maximization of wages, number of firms, each firm employs approximately L. So the wage per worker is simply maximum macroeconomic wage divided by the number of workers. This is just elementary. So I get the minimum wage immediately. They're not linked to cost of living, inflation, all that what they do. Those to me are secondary. The main thing is the entire macroeconomy must serve the people who are working, not the owners of capital. Okay, the owners of capital won't be happy with this, but I've got more bad news for the owners of capital. I'm not happy with minimum wages. Right? So the first step, minimum wage is locked in. Obviously, the rate of profit falls. Next, please. So now we are not happy. We want to further increase the wages. Okay. You may say, well, why don't you say limited capital? There's no need for that. Islam allows wealth, allows private sector. It's not against it, allows tijara between trading. So what do we do? How do we increase wages more? You can have a component of wages which is based on profit and loss sharing. Interesting ideas. You may have loss also if you go for the component which depends on profit. So the idea is that we had unrestrained profit. We brought it down to minimum wages. From here, we want to go to this rate, which finally we want to equalize to the macroeconomic rate of profit. Okay, that in the back of our mind, we find is correct, because what does the macroeconomic rate of profit mean? Which is maximizing wages. It means on the average across the entire economy, that should be the rate of profit. That's what it means. How do we achieve that? It's a remarkably simple way of achieving it. I mean, I started, I said, how do I reduce this, minimum wages even further? The answer comes out to be really simple. Next, please. Next, please. Yes. So what we do is, okay, now the wage will be now the minimum wage multiplied by a scaling factor S, which will hopefully increase this wages. Say S is 0.2, 0.1. Could also be minus 0.1, okay? But it's risk sharing, right? Because you're trying to share the profit of the firm now. So you scale the wages by this pure number. But you scale it, clearly the cost of production goes up or down depending on the sign of S, but this is new cost of production. Then you have the rate of profit, which is revenue over cost. You get this, you solve this, it's an S here, you can just solve the equation. And you can see already this can be positive or negative depending on the capital structure of the firm. On L, on K, how efficient the technology is, what you produce, what the price of the product is, all of this is here. You can't say positive or negative. You can go either way. We hope it's positive, otherwise the workers lose. Next, please. So now you have an information asymmetry, right? If you depend on the company to declare its profit, we know that they will never declare accurately. That's a bottleneck in Islamic finance. Because they have the information, they have the books, they have the law. They can always say, okay, I made almost zero profit. They say, okay, we have this magic weapon. We have the macroeconomic rate of profit that has come out with the optimization of wages. Let us fix the fraction we are sharing with the workers to be based on the macroeconomic rate of profit. When you do that, and this came as a surprise to me, you discover that the rate of profit of the firm collapses to pi e. I didn't expect that actually. Because I was reasoning unless I increase the wage more and more and more. But that you will collapse to pi e means that's it. You cannot go lower than that. But that is the macroeconomic rate of profit of the whole economy. So this is the magic that tells you, yes, let it be sharing with the wages does the job for you. Next, please. I do this little curve with just notional ideas of what the capital structure is, and you can see S can go negative or positive. Something very peculiar here. Fraction falls as the rate of profit rises. So I have some justification for that, but I'm not clear why it does that. But this is what the equation shows. Okay, so it's worth investigating what to do next. Next, please. I'm in good time. I'm half an hour. I will be on time. Okay. So, of course, there's a lot of criticism that one can make. So I'm going to go through all the criticisms one by one. If I missed any, please tell me in the discussion. The first criticism is that wages should be based on supply and demand of labor. How dare you go against the principle of economics, supply equal demand? That's premised on what? It's premised on the labor is a commodity like land, like raw material, like machinery. Quran is saying no, it's not a commodity. The Quran is saying labor is a means for your livelihood. It's not a commodity to make profit for some owners of capital. Clearly, the verse has said that. So this is null and void. Wages must be premised on the livelihood of the workers, the domestic one. Second thing is somebody had this another objection that reducing profit to this will drive away entrepreneurs, discourage innovation. They will be saying, why should we bother doing this? So I have a response to that. It has to, you have to ease in the system step by step. You can't just do it one day. But one thing we must remember, by E is still a substantial amount of profit you're making. It's not that you're getting wages. Number two, if you look at these multinationals, if you look at Microsoft, you look at Apple, the CEOs are managers, they're not owners of capital. and companies owned by Wall Street. They're very happy working there. So you can be an entrepreneur without being an owner of capital and still run it efficiently. So that's a sociological question. I also had a discussion in the paper I wrote for our first issue for who is a Muslim entrepreneur. A long discussion on that. And I said, Muslim entrepreneur is not about amassing wealth for himself and becoming the richest man in the world. Then these guys are already on the wrong track. He won't have Allah's mercy. Muslim entrepreneur is seeking the face of Almighty and seeking akhirat where he is in with the righteous. He's not seeking to plunder this world and end of story here. The Muslim entrepreneur is not your really profit maximizing entrepreneur. I don't run them down, but unfortunately that seems to be driving forces. Greed seems to be a very big part of the whole ethos of capital maximization. Next, please. So there's another thing, the high wages being paid to be shifted to the consumers by high prices for the goods and commodities produced. And this also actually, if you have a closed Islamic economic system, is not going to hold because every player in the market has the same constraints. So you can't push the prices to the market because the other people will then outprice it. So if you have a closed system, this open system, yeah, that's an issue. They can import things more cheaply than what you do. That can be addressed also. So the other objection that if you reduce rate of profit down to the macroeconomic rate of profit, you deter investors. So this is something that needs to be studied. But one can say that the state, you see, under capitalism, infrastructure is pushed to the private sector. So if the private sector doesn't feel there's enough return, nothing will happen. And Shahid had a brilliant, Professor Ibrahim had in my view, a brilliant discussion on infrastructure linked to Islamic financing, where all of these issues are settled. Because if the investment required, say for a hospital or road to a poor area is not profitable, then the society must step in through Waqf and Sukuk to do it. So this objection is only valid if it's a purely capitalist system. Next, please. So exchanging commodities and capital with the outside world, that's an unsolved problem. So we have to then expand this model to an open Islamic macroeconomy, which has balance of trade, has foreign exchange rate, has external rate of interest, all that has to be brought in, and that is outside this model. So I can't answer that. Next, please. Okay, so what conclusion? Okay, I have enough time for conclusion. What is the conclusion? Conclusion is there is a paradigm shift if you come from the Quranic point of view that private capital, holders of private capital, workers serve them in the firm. They are there to make profit for capital. Islamic economy is upside down. The holders of capital are there to serve the workers. If you don't like it, then you go somewhere else, okay? Because that's the macroeconomic system. There's also an issue, who can implement this? Only the leaders are righteous. You can't have a bunch of looters and marauders who will implement this. They're the ones who will lose. So, Quran is a beautiful ayat, and who are these leaders? He says, those who will be in power in the land. This is the word, in power in the land. Observe prayer, give charity, command what is right, and forbid what is wrong. And to Allah belongs the outcome of events. These are beautiful verses. Next, please. So every year, the critical points must be ascertained, and we must determine what the macroeconomy does every year. Minimum wages fixed by the maximum wages and profit and loss by a fee. Workers need to be given a choice of opting out. They can look at the profit sharing, look at the capital structure of the company, say, it's too risky. I think I'll just go with minimum wages. Because it's clearly something that also can go the other way. So you can make the model much more granular by saying L can be a sum of small subsectors, each subsector a different salary because the skilled, unskilled, managerial, technocrats, whatnot. So there's a first cut on a microeconomy. Next, please. Here's an interesting, spin-off. So maximizing wages increases the buying power of the vast majority of the people. This creates a strong demand for products, and the strong demand then can be met with supply, which entails investment and the expansion of the economy. And if the economy expands, then the workers get even more salary, which leads to more demand, which leads to more investment. It's a virtuous cycle. So giving wages to the workers is not a bad idea. You see, there's a very well-known argument by Marx that why the cyclical crisis, his view is that they depress the wages to maximize profit, they overproduce, the people can't buy the products, and then basically they have a bust. Just summarizing very crudely. So by depressing wages, in the end, the economy doesn't benefit. In this case, the economy, it lays the foundation for equitable system, providing a sustainable growth, suited for increasing people's well-being and not just the well-being of the entrepreneurs. So this entrepreneurs may not like a lot, but this is a more just system. Next, please. The transition from a market-based capital economy to Islamic economy has to be done in 2 steps. It cannot be done 1 step. First step is minimum wages, and let the more efficient firms still have a high rate of profit. Once you bring in the profit sharing wages, then you zero them into macroeconomic rate of profit, end of story. That's locked in. So next stage, which needs a lot of maturity from the entrepreneurs, that you do profit sharing with the workers, and then you end up profit of the unconstrained system to minimum wages to finally profit and loss sharing wages. So this is basically where I am. Next, please. This is actually not part of the talk. This to tell you there is no system in the world which has Islamic macroeconomy. Where do you go with this? So what I plan to do with this is, simulation. This beautiful simulation you can do, see how this affects investment. I model for investments, for consumption, for inflation, for unemployment. Everything is in my paper, okay? The huge microeconomic model I have. So then one can do a study that if I change this parameter, if I do this, if I do that, how does the system respond? There's a lot of work can be done. But you may say, what's the point? You're like dreaming, no one's going to implement it. That is not our take, right? Our take as academics and scholars is to explore the ideas. And then whether it's actualized, it's up to the leaders. And, God willing, if they're righteous, maybe they take the good steps in the right direction. Okay, that's it. I'm exactly within my time. Thank you.
Thank you, Prof. Bilal. Thank you so much, Kemi. Dr. Saad, can you hear us?
Yes, I can. I can hear you through the.
Yeah. Okay. You have 5 minutes here to discuss your papers. Yeah. All right.
Sure. Just give me 1 second. Okay. First of all, my heartiest congratulations to the team for organizing the event. I think it went very well, and my sincere apologies for not being there. The good news is I have the visa. So the bad news is I could not make in time. So I owe you a visit to Singapore. So hopefully I'll be visiting Singapore very soon. A few regarding the idea. It's a very fascinating idea that Professor Bilal came up with. There are a few things which I really liked about the idea, and the foremost is that up till now, the entire focus of the conversation in the Islamic finance literature has been on microeconomy or on financial institutions. And now suddenly he changes the focus to the macroeconomy. And being a non-economist, and I think that has been an advantage in this case. I mean, no one would dare start with the macroeconomy these days. They would always start with the microeconomies. And he said, let's dump the rules and start with the macroeconomy. And he has made a very intelligent and a very smart, analysis of how that needs to be done. So that's my congratulations to him for taking that risky approach. And that's what our journal also needs and requires. Secondly, the Islamic finance literature has been predominantly focused on the idea of either prohibition of interest or the risk-taking amongst them have also focused on ideas of what is a fair profit. But the entire focus has been on issues relating to fairness amongst the capital providers. So how profit should be shared between different capital providers, between debt holder, equity holder, and others. Now, even the risk sharing literature, which has evolved, which has been one of the most primary literature of the Islamic finance literature, it also deals with the question of fairness across different capital providers. And here, Prof. Bilal deals with the idea of capital, of fairness between two very different classes, between the capital provider and between labor. Now, that's the stream of work that needs to be built on and needs to be further examined. In the current literature, labor never enters the equation directly. It enters in the current literature on Islamic finance, labor enters the equation indirectly by first accumulating capital, then investing it in a risk-sharing manner, and then attaining it. While the stream of literature that he's approaching, he is entering the labor force directly into the equation, which is very interesting and which needs to be further examined. Now, it's a huge literature right now, since it's an emerging one. Rather than the criticism, it's, for me, what is most important for the next at least few papers or so, to clarify these points. Rather than, once the eventual outcome becomes clarified and clear, then we can go into other issues of criticism and see to what extent it matches with some of the existing paradigms. Now, one of the few, in terms of the few clarity questions, one of the questions that I have is maximizing wage the right term? That's the first question. Are we really so when Prof. Bilal is drawing from that ayat, does that ayat means that wages should be maximized, or a reasonable livelihood to a large number of people should be provided? Are the two terms synonymous? So that's the first question I have. Secondly, the question that I have is, from an Islamic perspective, first of all, this matter has to be dealt with in a philosophical way, deriving from the verses. Is providing of wages more sacred than the risk-adjusted, not profit-maximizing capital, but risk-adjusted capital? Is provision of wages more sacred from a theological point of view than providing risk-adjusted returns on capital? Can we find reasons for that? And I have a few reasons in my mind, which we can all very well discuss, but that's a point that needs to be clarified. Thirdly, regarding the basic model, one of the most interesting things about the paper is that the paper deals with, at times it deals with the accounting definition of profit, and then it deals with the macroeconomic definition of profit. That is where the crux of the paper is, and where the originality of the paper is. But that is something that needs to be further clarified, because in the mainstream literature, we deal with an accounting definition of profit. Does surplusless value, the way Prof. Bilal has defined profit as the base equation of profit, does surplus value and the accounting definition of profit, are they two synonymous? Now, one can always make a case that from macroeconomic perspective, the surplus value definition is effective, but that is something that needs to be slightly clarified as we move along. My feeling is, if we clarify these issues, then there is a good possibility that we might be able to develop a stream of literature around these ideas, which should be the focus of our journal. I think my 5 minutes are up, so over to the organizers.
Thank you, Dr. Sahib. Bilal, you want to respond?
As always, Dr. Saad is precise, perceptive, and accurate. Last time he responded to my article on Islamic macroeconomics, I told him his observations constitute the proposal for a PhD. Okay, so again, all the points you raised are fantastic. I would love to explore them further. And as you raised the main issue, I want to shift from this obsession with owners of capital to the workers who produce in the factories and in the offices. Okay, so you grasp that, and to me that is the essence of the whole economy, which, as you correctly point out, has somehow been sidelined. This never appears. I mean, even the next talk I'll give is to bondholders, the coupons they get, the discounting of cash flows. That's all in the name of capital. So let's come to the workers who constitute hundreds of millions of people. And that, yeah, I'm happy to see that, we are on the same page on that. Alhamdulillah. Thank you for your, excellent discussion.
Thank you, Doc. Now, anyone from the audience?
I have some clarifying questions, Prof. Are you suggesting, so from your model, it seems to be that you're saying people should be given a minimum wage.
Yes.
And then participate in a share profit, right? Yeah. And how does that jive with the macroeconomic average wage that you work out?
So the macroeconomy has a wage, which is a function of the exogenous parameter, right? So it has some value. Now the issue is that the external.
So let's say there is some amount X.
X. So the point is the macroeconomic wage appeared from the microeconomy in the first place. Someone has generated that. Now we're questioning what should the macroeconomic parameters be adjusted? How should money supply, government expenses, external, be tuned to maximize the macroeconomic wage you got? And then we are saying, well, now let's go down to where we came from and then impose this, because this is part of the macroeconomy. Impose. It's all imposing.
So in other words, everybody will be getting more or less the
minimum wage thing.
Average national
and
wage level.
normally based on inflation, based on cost of living, cost of index. But this way we are saying no, maximum possible wage can be attained by adjusting the government expenditure and money supply, which is normally never brought into play. These are given.
So basically you're saying everybody will be more or less earning.
Yeah, on the average.
The problem I have with that is, in different industries, the productivity levels are different and it should be different. Right? For example, if you take biotechnology and all the startup areas, they earn much more, they should. Because they're taking a lot of risk, yeah. And they should earn more. But if you say a factory worker in a safe industry should also, or an office worker should earn the same thing that the guys.
Yeah, so I left this. I left this at two steps. So the first step is that, but even the first step is actually not the last word, because the number of workers can be unskilled, can be skilled, can be PhDs. They're all workers, right?
Right.
So you have to granulate the wages based on that. Okay, first. Second thing is that after you impose minimum wages, there's still the variation in the rate of profit allowed. Only when you impose profit sharing wages that you throw everybody to macroeconomic rate of profit.
But you won't necessarily reach that equality in wages, right? Because of variations in productivity. Number one.
Yeah.
Number two is, isn't it already happening in the real world? Because, for example, many US companies, even in Malaysian companies, they have a salary. Okay, you get a fixed salary, but you also get stock options and all these things. So when you get stock options, that's exactly risk sharing.
But what we are driving at is the following: that finally, there should be one rate of profit for all forms of capital. Okay, I mean, there'll be an exception and there'll be caveats and all, but that is like a minor issue, like 10%. The point is that the entire economy must be geared towards serving the workers.
Yeah, I mean, and that we agree. But we have to look at some of the consequences.
Sure, but
for example, if I have a great idea, I'm a scientist, a great idea, I want to take on a product, I want to do a startup, I'm taking huge risk, right? I mean, I put all my wealth.
So I have the objection, entrepreneurial drive will be dampened. I do acknowledge that, right? But I'm saying, look, if you're only driven by yourself and by private maximization, then you don't belong here.
No, it's not so much self and private self. I mean, it's not maximizing profit. But basically, I'm taking so much and taking a risk.
Okay, let me give you a counter example. Huawei, which is one of the biggest firms in the world, most innovative, 98.5% of Huawei is owned by the employees.
Well, many American companies saying
I know American company, okay. I know this,
a number of companies also.
What I'm saying is that ownership structure did not focus on individuals making more money. It's here the system, like the Huawei, the whole makes more money, everybody shares in it. So in this sense, democratic socialism or whatever they call it, the workers own the factory. But if you think of the macroeconomy, then, what I feel is that the labor should be on top, whatever is possible, to facilitate their livelihood and their well-being, which is not happening. Yeah.
It's just that certain systems allow for exploit.
Well,
But in competitive systems, I mean, if you think of the economic equilibrium, the wages should equal productivity. So as
no,
productivity
actually, I don't say that. You know why? Because you notice that labor, productivity basically means supply and demand of labor. That basically comes with labor as a commodity. I don't accept labor as a commodity. It's not like buying and selling, raw materials, buying and selling machinery. It has to be right.
Can we take one more question? So Mustafa has.
To Bill for the excellent presentation. Also, Dr. Saad, excellent discussion. I have also this labor productivity comment. But in addition, is it also like integrate factors like what is the repercussion of this on inflation, like the inflation repercussions? And another aspect is given, the current pressure on all firms, like what will be the effect of this system on the adoption of automation on companies? So would that accelerate it or not? Yes, automation. So those are like, and this is like a quite new literature, like automation literature, etc. Labor productivity. Might be also some aspects, additional aspects that you might integrate in your future.
I like that. You know why? Because I would like to factor in that if the wealth of society increases due to automation, technology breakthrough, then again the macroeconomy should be brought in to distribute the gains to the workers. No matter who has made what breakthrough, the society is sustaining the whole system.
So an entrepreneur cannot try to avoid labor by putting more money.
Yeah, because in automation, it's okay, guys. You make more money, get the macroeconomy, boom.
That's one comment there. On that point, the entrepreneurship, right, from an entrepreneur standpoint, I think the other concern is access to capital. They will start off their entrepreneurship, right? So fair access to capital is another parameter that is key, because if you talk about a startup's journey, a startup may only start as just an individual founder inserting an idea and going through a process, right, of trying to raise, get resources to build on an origination product. Now that journey is it's intensive.
That's an excellent point. You know what you were saying is that in an Islamic macroeconomy, how do we sustain and support startups? What is the role of venture capital? How do we support entrepreneurs? And that it has to be worked out. But that's one of the unique features.
Correct. And then beyond that is also the initial team, because a lot of it has also got to do with the intellectual property, right? So if you talk about labor, what does labor mean?
Yeah.
What is the contribution to a company? And what does a wage mean? The wage is not just if I look at an investment cycle, there's a J curve, as we call it, right? You invest until you be able to start creating a commercial product. But when in that journey, you have different contributors to a company, right? And these contributors could be employees who have taken, much smaller wage perhaps at the start, and would have left that journey, right, and moved on to a different country. So how does these are things that need to be considered.
My model is extremely crude. So it's the first approximation to the real world.
Yes, I'm just thinking out loud.
All of the details should be worked out.
All right.
Yeah, Saad has a question or observation.
Can I say something? Yes, thank you. One of the interesting things, I've read the papers carefully. I mean, not as carefully as should have, but still somewhat carefully. Most of the arguments that I see around the table are on microeconomics. And the crux of the paper is on macroeconomic issues from an Islamic perspective. Now, very interestingly, the paper deals with what proportion of the macroeconomic profit and the macroeconomic share of labor to the GDP is most fair in terms of how should that distribution be done. Now, when that so if and that for me was the originality of the idea. When it comes down to the microeconomy, now there so imagine a particular distribution, and that part of the paper needs to be developed further. But the way I visualize it, there is imagine a proportion of distribution of capital that is attributed to the capital providers or to the entrepreneurs. For that, different entrepreneurs can compete with each other on that distribution of capital, where a risky firm might end up getting a very high return and a non-risky firm might end up getting a very low return. So that is the interesting question for me. Because the moment you come to micro level, if you start homogenizing everything, then we are in all sorts of troubles. But if we keep the share of capital and labor fair, and then at micro level, we have these risk adjusted competition even between that share of the pie which is attributed to capital and that share of the pie which is attributed to labor, I think we'll be able to have the best of both the worlds. Thanks.
Thank you so much. I'm going to take a short break. After such an heavy discussion, so we should resume in 10 minutes. Right. The far has to go break. So after this brochure, we'll continue with our second presentation. Thank you, guys. Thank you. We have a round of applause for Professor.
Some light refreshments.
This is Linton from, you remember he came 10 years ago with Raj? Oh, yeah. Now he's running the Islamic Finance Singapore.
Yeah, it's like that. So this one is more important because I noticed that after
It's more important for the other side. Yeah.
and then his wife picking up his wife when he asks questions also picking up.
I cannot hear this one.
Yeah.
Because the speaker was down here. And some of the talk very soft.
A few months already. That's it.
I think that so context of the great divide between, the have and the have.
Yeah, it's a labor capital, right? Nobody wants to speak of labor. No labor unions. Unions are basically also in the service of other capital. And if we have copyright, not very bad.
Ready, Prof? Yeah. When you all think of this, we are about to start. Just we might be waiting for program. You will discuss it.
We can start with yes, random people.
Yeah.
I can story before I start.
I guess for example, okay.
I have a student. She's in Bangalore now as a something, and
she did a paper on basically optimal securities in Islamic finance. And we had a number of solutions and decreasing in pecking order of efficiency. So the paper still is not published, but one of the this paper uses the model of that paper. This was sharing it's always on the upside, sharing in the appreciation, sharing the income. So, but the client and modeling thing, very nice PhD student. I was a PhD student, and I spoke very in the morning. So, we traditional financing model for infrastructure and public-private partnership is very helpful. The project is not profitable, but it's essential for society. So the idea was got to have, we have Islamic endowments in the form of waqf. They have to step in. Okay. And so basically, this is what I was doing, and I was trying to solve the mathematical option pricing. And I'm no option pricing expert. I'm going to be very honest. I'm not an option pricing expert. So I was talking to different people, and I had a sabbatical coming up. So I went 2 months to Indonesia, and I should talk, people in. I went to Bandung, the Bandung Institute of Technology, and I should talk to colleagues there in the school, and everybody was very interested. They were not interested in looking. Then I found this sister, Diana, and she was visiting the math department, and she decided to work with me. So we were struggling for more than 2 years with the model, And in the end, I wanted somebody to solve the model numerically. So I went back to my old colleague, Rafal. I said, Rafal, the model is done. We need to do it. We need to even sharpen the model. So that's where, this paper overall has taken about 4 years, and we're trying to basically, in another month or 2 months' time, we're trying to send it to a good journal. We tried American Economic Review, and we got a desk reject. So, but so please, you can do the next slide.
Yeah, because for the live audience.
Sorry. So, the motivation is, basically to have, motivation is to do economic development of emerging Muslim economies, and we have basically, we model the financing of infrastructure with the charitable endowment, and the way we do it is, infrastructure quality has a reward penalty scheme. So if a developer operator makes a quality product, then the company will get a rewarded. But if the product quality is low, then there will be a penalty. And then there is a, so there's a, basically incentivizing quality. And we have a sukuk also. Sukuk is a financier along with the waqf, but the payoffs to the waqf can be negative. Okay, and we have some sort of a closed form solution, but not completely, so we do numerical simulation basically. Can we get the next one, please? Okay. So the motivation here is, inclusive financial infrastructures among the key enabling factors in regional development, sustainable regional development, but there is an absence of suitable financing, which basically, contributes to years of pent-up deficits in infrastructure development. What we are trying to say is, many of these Muslim countries have lots of deficit. You cannot ask them to
build up the infrastructure. So the global south, 29% of the population lives in predominantly Muslim countries. The Muslim majority countries are in dire need for infrastructure financing. And however, the constraints, there are religious constraints on riba and gharar. And you know, so you got to understand what exactly is the maqasid behind the objectives of the Sharia on as it pertains to riba and as pertains to gharar. In this paper, we define the objectives of riba. I mean, objective for the prohibition of riba is agency cost of debt. And there are two different agency cost of debt. One is risk shifting and one is underinvestment. And both of them are connected. Risk shifting basically implies that in the poor state of the economy, whoever has borrowed money, the borrower basically defaults on the facility. And underinvestment is basically, and if the financier knows that you're going to default, the financier is going to jack up your interest rates and even lower your amount lent. So so let's go to the next slide, please. So here there is a sukuk, there is an investor who basically is a financier along with the work, so there are real assets used and there is a clear transfer of ownership. Okay. Majority of the contemporary sukuk deviate from ideal, because the industry, Islamic finance industry, employs asset-based instead of asset-backed, and there is a problem in that. This is like covenant light to covenant heavy. So anytime you have covenant light facility, it will trade at a discount. And there is a romanticism of the medieval Islamic forms of transactions. Everybody talks about mudaraba and musharaka, but the last time I looked at one of the hadiths, Aisha radiallahu anha was talking about Rasul sallallahu alaihi wasallam, and she says Rasul sallallahu alaihi wasallam loved horses. But these days we don't ride horses anymore, So, but the ulama use this, pricing of sukuk is not linked to performance of underlying infrastructure project, and there is inefficient institutionalization of the Sharia certification. Okay, can we go to the next one, please? The ijtihad basically has lacked, if I say this to a Sharia scholar, they will get upset at me. They will say, oh, we have kept updated. But still, the moment they talk about mudaraba and musharaka, it shows they haven't developed, and the ijtihad is very much based on it's a legal based, and the definition of riba, they just literally talk about interest rate, but there is more deeper meaning than that, and that's the agency cost of debt. And gharar, basically they call it excessive uncertainty. It's not exactly that. Gharar is basically can ensue from either asymmetric information or excessive risk taking. And the maqasid of Sharia is the higher objectives. So anyway, let's go to the next this thing. Okay, so I mentioned agency cost of debt is risk shifting, or it can be also be underinvestment. We have skipped that. Asymmetric information can be ex ante adverse selection or ex post moral hazard. Okay, let's go to the next one. Okay, let's go to the next slide. Okay, now we have basically 4 players here. 4 players in this scheme. One is the charitable endowment. Okay, it's basically an investor. It basically okay, let's go to the next one. I'll show that there's a figures. Okay, this is the public-private partnership, and as I mentioned, it only goes for profitable projects. It doesn't go for projects which are not profitable. Can we go to the next one? So this one is we have modified it using equity owner is the waqf here, which basically wants to develop an infrastructure. The title of the infrastructure is kept in the special purpose vehicle, and there is a financier who basically is investing in the sukuk, and government is the other player. The first player is the Waqf. Government is the other player. Government facilitates either granting of land or selling a land at a discount. And then the third player is private developer. It's basically developer come operator come and then it transfers. The developer builds the infrastructure, operates it for some time, provides the knowledge of operating the infrastructure, and then transfers it. And the other one is the sukuk investor. So these are four entities. Can we go next one, please? And let's go to the next one, please. Okay, now, how do we, there are two issues here we need to do, two main issues. How do we basically address riba, and how do we adjust what you call, how do we alleviate riba or mitigate riba, and how do we mitigate asymmetric information? For mitigating asymmetric information, basically we have to mitigate two issues. One is adverse selection. This is before the contract is signed, and moral hazard. So we select, the Waqf basically selects top tier developer through a due diligence process. You only select, you don't select, there should be no nepotism, You select only an entity which is known to be very good, okay? And then, sovereign entity may, the government can ascertain availability of land, while fiduciaries, private investors and charity release funds in stages of construction. There is a final fee based on the quality of construction and timely delivery. Private developer to operate the facility for, up till 3 years, train local personnel before handing over. Moral hazard, so this is where we basically address adverse selection. The other way is moral. After the contract is signed, moral hazard is we pledge the infrastructure title against lien to restrain endowment from sale. So if there is a problem with this thing, then the sukuk investors they have pledged the infrastructure title. Okay. Private investor, they add ironclad covenants to hybrid loan contract could preserve collateral value. That means maintenance is to be done by the developer, and that maintenance, so this is an ironclad covenant. The maintenance is already written down in the covenant, and insurance also is written down. And there is a sovereign guarantee. Product. The government guarantees the pricing of the infrastructure services. Okay, it mitigates income risk. Okay, can we go to the next one now? The other thing is mitigating riba. So we have talked about mitigating a gharar. Mitigating riba is very important. And if you have a plain vanilla interest contract, and if the infrastructure doesn't generate any income, so let's say CL is the critical stage in the future state of the economy, then what happens? The infrastructure, payoffs can increase linearly, and then, then after CL, the infrastructure can pay the loan, this thing. But before CL, the infrastructure will default. So if it is default, it will basically, when it is default, it doesn't take care of the infrastructure, and there is a risk shifting cost, and the risk shifting cost is the asset destruction. What's that?
What is CL?
CL is the critical stage. Like for instance, let's say you have $1 million in income to pay off every year, but in the year one itself, if let's say the year one your income is $800,000, not $1 million, so you will default. Okay, but when you try to default, you won't take care of the infrastructure. You say, what do I benefit? The infrastructure, the asset will be taken away from me. So if you don't take care of if you don't maintain the collateral, then the collateral value will go down. And this triangle represents the basically risk shifting cost, which is basically financial fragility. Can we go to the next one? And another way of representing financial fragility is the asset follows a random walk with a slightly upward trend. But then as the loan is being paid off with a riba, and this is ribawi loan, okay? This is not an Islamic loan. If the ribawi loan, or even a murabaha, okay? If it's a murabaha also, if it's paid off, the murabaha cuts the asset in 2 points, and here the equity is negative. When the equity is negative, the borrower will default, and then once the borrower default, then the asset dynamics changes to a lower this thing. So you want to avoid equity going underwater. Can we go next one, please? And this is underinvestment. So the other slides were risk shifting, and this slide is underinvestment. What happens is, if your free cash flow is below the debt obligation, you're in a debt trap. And both of them are very much linked, which I'll talk about tomorrow. Okay, can you go to the next slide? So how do we address this situation is the key. How do we address the situation of risk shifting as well as underinvestment? Okay, now, as I mentioned, both of them are linked. So a couple of years before, my co-author Rafal used to go to the American Economic Association meetings and used to chase the Nobel Prize winner, Robert Shiller. I said, Bob, you got to work with us, work with us. And Robert Shiller at that time, during the subprime crisis, he had written a book on continuous workout mortgage, whereby you share in the risk. Okay, this is the put option. You share in the risk. So he was selling that instead of a ribawi mortgage, you have a mortgage where the bank shares the risk. But when you have a mortgage where the bank shares the risk, the cost of financing will go up, because there is some kind of an insurance protection. Can we go next? So if you have that kind of a risk sharing mortgage, then what happens is there will be no negative equity, because the bank will absorb the loss with you. Okay, so there is no negative equity. The bank absorbs the loss with you. Can we go next? But there is a problem. Okay, can we go before the one before, please? Okay, this one helps you on the downside, but it becomes very expensive. So if you want to reduce the cost of funding, there is one more way to do it. Okay, next one, please. What we do is, instead of with a continuous workout financing, you have a hybrid of continuous workout plus a participating financing. So on the upside, you grant either sharing in the extra income or sharing in the appreciation. Okay, so what's that? Yeah, it's a modified mudaraba, but we don't want to use the mudaraba because it's a very old contract, But look, the spirit of mudaraba we are using. Okay. Anyway, so can we go to the? So this is the way we mitigate riba. I've already discussed how we mitigate gharar. This is the way. So this is the participation financing. There's a fixed debt payment, and there is a net income from operations. So you share in it, and you share the appreciation. Can we go a little backwards? One more, yeah. Here I'm combining continuous workout with the one afterwards, So okay, next one, please. So if you take individually, can I go back, please? Okay, if you look at continuous workout, it is higher, it's more costly than ribawi debt. So basically, it goes against the Quranic verse, expropriation. Okay, it's Surah 4. I'm making, okay, I can give you the verse later on, So it goes against the verse on expropriation. But if you add the risk of the reward sharing, then it's consistent. So, but if you take the participating, can we go to the next one? If you take this one, then it goes against the verse of the Quran which talks about giving respite to borrowers. Giving respite to borrowers has a different meaning, in finance. The ulama think, if the banks basically charge you a penalty and give the penalty to charity, that satisfies. It doesn't mean that. I understood the meaning of respite was when I was young and I was doing my master's at Penn, University of Pennsylvania. And at those days, the US was in a recession and Chrysler was having lots of problems. And Chrysler had funded itself using preferred stock. So in the time of distress, Chrysler just skipped its dividends to preferred stock. Of course, when you skip dividends to preferred stock, you also skip dividends to common stock, So what happened is for a couple of years, 2 years, Chrysler was not paying dividends. And then once it was profitable, it's not only resumed dividends, but it paid back the skip dividends. So the Quran talks about either give when you give respite, you can you can either pay the skipped this thing, or you can avoid paying the skip thing. So this is the ulama don't understand this thing. Okay, let's go to the next one, please. So basically, now we start modeling. Okay, can we go to the next one? There is a big picture, and okay, this is time zero. There is a time TL which is negative, which is basically land acquisition, and between TC and zero is construction phase. You select the developer. There is a construction phase. Between zero and capital T, there's a developer's managing phase, and T to infinity is the handover to the work. Okay, so can we go to the previous slide? So here, government provides land, developer builds infrastructure and operates it until T greater than zero. Sukuk holders partially fund the same. Work ultimately owns infrastructure and operates it from time T until infinity. Construction starts T0 less than zero, it's negative, and ends at T equals zero. Infrastructure cost C, which is basically greater than zero, TC requires land costing L. So managing starts at T equals zero, developer operates facility until T. Funding land and infrastructure raised at time TL. Sukuk funding is capital raised from Sukuk is KS. Charitable endowment funding is KW. And basically, if you discount the what you call the total capital raised, is basically comes from the Sukuk and the and this is it's basically discounted cash flow, the land and the construction. Okay, can we go to the next one, please? And the next one. So Sukuk holders get paid from time zero to time capital T. There's a tractable. There's an assumption of tractability of the model. Sukuk and developer tenure coincides at capital T. Independent experts basically accurately assigns a penalty if lower quality is delivered. So there's an alpha for the quality 1 minus Q. Q is so when Q is 0 means quality is very low, and Q is 1 means quality is high. When quality is high, the developer, builder, operator, gets paid a bit extra. When quality is low, they don't get the bonus there. So can we go next one, please? So here, developer operator receives payment at the rate small g. Small g is this is the fixed term, fixed money paid. This is before prior to construction, and this is at the operation stage. And so this one is with risk sharing. This capital G is expanded for risk sharing plus profit sharing bonus. Okay, in the poor state, this is paid. In the normal state, this is paid, and in the good state, the bonus is paid. Okay, can we go to the next place? How many more minutes I have?
For 10 minutes.
10 minutes, okay. Sukuk people.
Can you go back to the main idea? What is X here? The payment stream.
Uh,
Previous slide.
Yeah, previous slide. Okay.
Yeah.
X is basically a stochastic cash flow.
So the cash flow coming in from the investors.
Coming in from the infrastructure.
So cash flow be paid out.
So the developer operator gets paid some.
Paid.
A is the basically threshold. Okay. I mean,
Defining it here.
there you have been defining it here. There is a diagram. Can we go further ahead? Let's see if there is a picture in there. Otherwise, I got a picture in my paper. I haven't shown. Okay, let's go back. So, okay. So let's go back a little bit. Okay. Here, if X is less than the threshold, then this is less than 1. And if it is less than 1, then it will be risk sharing, and if X is greater than A, then basically it's going to be gamma times, it's going to be 1 minimum. And then there'll be a profit sharing. But if X is less than A, then this one disappears.
How do you fix it?
This is, this is done
XNT before the contract.
before the contract, yeah. Okay, let's go to the, okay, Sukuk. For Sukuk, we take the cash flows, first, okay. The Sukuk gets a Y, Sukuk gets X is the stochastic minus what is being paid to the developer operator is, we call it YT. And the Sukuk holder gets an S, a function of Y, and the Waqf gets Y minus SYT. It's the residual, okay? And the Sukuk payoff again is risk-sharing and a profit sharing bonus. Okay, so you have poor state normals. Okay, can we go ahead next? Okay, then we have this is the residual paid to the Waqf. Okay, so it's X minus minus payments to the Sukuk holders minus payment to the developer operator. So this is the the Waqf get the third bottom tranche after developer and Sukuk holders get paid first. Okay, can we go to the next one? What's that?
Why do we have a bonus payment when they have to share?
Yeah, because if the product quality is good, then there is a bonus payment paid to the developer operator. And the Sukuk holders also share in a reward. They're sharing the risk, so they have to be compensated.
You can solve that by making the developer also be part of the project.
Yeah.
Then there's no need to never penalizing them.
No,
You finish.
let me finish it, okay. So then what we know, we make assumption that X follows a Brownian motion. We use the flows and caps from Shackleton and Wojciechowski. Let's go to the next one, please. Okay, this is the value of the cash flows to the developer operator. So this is simplified with the this way, and then can you go to the next one?
Is getting the put option or is getting the call option?
What's that? Can you go back, please?
Call option.
This, yeah, there is a put option on the risk sharing and there is a call option on this thing. What's that? This is the value of the cash flows to the developer operator.
Yeah.
So we evaluate the value to each of the stakeholders. So this is to the developer operator. Can we go to the next one? Okay, can we go to the next one? I'm not going to read this thing. This is the cash flows, discounted cash flows. This is the value to the Sukuk holders.
Can you just go back to the slide Hubert was talking about? Put in the call. So one is the one somebody short and long. Someone short on the put and long on the call.
Yeah.
How did that come about? It's a very interesting development.
No, because the thing is, one of them is, if it is below the A, then this comes to a value and this one disappears.
Yes, so long and short.
One of the options will be in the money. Yeah.
My question, why do you need a call and put? Because the put helps one set of people in the transaction.
This is
the call helps one set.
Yeah, but look, we are doing over time. We're doing over time, so you have to integrate over time.
Just asking, why do you need all the call and put? That's why.
I think it's linked to the pure function. If you go back, you see why he developed a put.
Okay, let's go back. There's a diagram. Okay, let's go back.
Yes, here.
Let me finish this first. Okay,
who is the holder of the put and call option? That's what Mobile is saying.
Okay, the holder of the put and call of one holder of the put and call option is the developer operator. Okay. The second holder of the put and what's that? That's what we defined earlier with the G.
It's not a call option. It's the equation of call option which came in. Actually, it's coming from his payoff function. If you look at his payoff function.
Let's go to the next one. Yeah.
Actually, not doing option theory. It just happened to use the mathematics of option theory. You look at his payoff function.
Okay.
He wrote it already.
Okay.
Then you do expectation value. Then you discover, hey, this looks like a call, looks like a put.
Yeah.
But no one's selling put and a call.
It's embedded. It's an embedded put and call. Yeah.
That's really a straight up. You have a call and
Okay, next, let's go to the next one, because I'm running short of time, okay? And then this is the value to the waqf, okay? And the closed form solution is this, well, okay, let's go to the next one. The next one is, let's go to the next one, please. Next one is numerical simulation, okay? So we do numerical simulation here, and we get an idea of how this thing functions, can we go to the next one? And then if we add all the cash flows together, it should come back to a discounted value of the initial this thing. Okay, so these are some of the the value of the contract to the developer for medium risk. So we do good quality, medium quality, low quality. Okay, so we do numerical simulation, and that's let's go to the conclusion. Okay, yes. Okay, no. Let's go before the one. No, okay. The next one, please. Next one. Okay. We design a cost-effective fragile fee sukuk termed as participating preferred financing by coalescing the continuous workout feature with the participating facilities. This allows a participating preferred facility to be malleable in the income growth dimension and robust to external shocks. In the future states of the economy, it mitigates the negative impact of financialization by reducing the risk shifting and underinvestment. The adoption of PPF can vitalize the financial sector, boost its resilience, and further regional and economic and spatial development. Can we go to the next one, please? Infrastructure is crucial to unlocking sustainable development goals. Muslim countries are in dire need of innovative investment that not only satisfies their religious boundary but also improves economic efficiency of conventional financing. We illustrate that sukuk is currently structured akin to the conventional bond but with smoke and mirrors. So this one is different from what is being practiced currently. We overcome these issues by incorporating the cultural term into our analysis without losing sight of the economic aspect. We propose and improve sukuk as a feasible solution for the infrastructure financing gap. We mathematically model the improved sukuk integrating the literature on project financing, charitable endowment, and development finance. We argue that PPP framework offers the potential to rejuvenate the structure of sukuk as it doesn't separate the financing of the project with development, operation, maintenance, and transfer mechanism. This allows a sukuk to mitigate the asset links centrality issue as well as opacity problem of adverse selection and bottom asset. I think, is there one more slide? Yeah, that's all. That's all, folks.
Thank you so much, Prof. Prof. Dylan,
Yes.
as a discussant, you got 5 minutes here.
Okay, thank you, Shahid. Actually, I was quite impressed by it, although others may not see why, because it's a bit technical. The reason I tell you why I'm impressed, because 2 reasons. Look, discuss an project with under the water when it starts, present value of the project negative. And clearly why? Because the return on it, a hospital or a go to a distant village, clearly will not have the rate of return that a private investor will have. So then what happens? And this you will get cut off from investments. So what you did, you brought in what to mitigate that negative net present value. And then you have these incentives based on stochastic equations which reward the developer for performing. And the sukuk also gets returns from the revenue generated by the project. Now, the reason that I am impressed is because, I've discussed with Prof. at length about infrastructure financing using Islamic instruments. The main thing you have done, intentionally or unintentionally, is to write a payoff function which can be analyzed mathematically. That to me is the crux of the whole matter. The rest of it I leave to you, your wisdom, why you wrote off that, because it's too difficult for me. But once you have the mathematical expression, which I was telling, when you give the lecture to Prof. where the option comes out, not as an option, it's a pricing, follow the stochastic process, and the formula looks like a put and call option. It also behaves like embedded. Yeah, so the question to me is very interesting. How do you unpack the contract to see where it originates from? The point that Prof. was making is fundamental. Where it comes from? Who's holding what option? Because that reflects the nature of the contract. But what I'm happy about is the payoff function. You know why? Because you can use all kinds of mathematics on it. You know why? Because your mean reverting stochastic process is an elementary process, right? There's so many more complicated processes that the return can follow. But without the payoff function, you can't do anything. With all of the finance, the Islamic, frameworks of book is in the payoff function. So that's why, it's still difficult to follow a chain of reasoning because you have to be a specialist. But I'm sure specialists will also agree that the steps you've taken are reasonable. And then you have reached me, and this Dr. Paul said this in passing. I don't know how many of you grasp that infrastructure financing is $1 trillion undertaking with the Belt Road Initiative, and the Asian Infrastructure Industrial Bank has been set up only for infrastructure. So these instruments are waiting. If you can properly, develop it, then you present it to the world, because 60% of Belt Road Initiative is to Muslim countries. So this would resonate with them, because they would realize that yes, it's compliant with our beliefs and it is not interest based. So I think it is great potential. I have nothing negative to say because the finances are a bit beyond me, to be honest. And Prabhupada is an expert on that. But the payoff function, I just really have. I'm quite,
like the math, right?
Yeah, I know the math, quite enamored by the payoff function. I think that is opening the door to a lot of interesting analysis. Really, I mean, if one can really make it a really solid instrument, I think the infrastructure is the name of the game today. But we don't realize that the whole $3 trillion investment going on Belt Road Initiative is infrastructure. And yet you said Muslim countries are desperately seeking infrastructure. So, the two can meet. And, not the question, nobody is an angel. China has its own interest. We don't care. As long as our interests are protected, they have partners, right? If we don't like them, we go somewhere else. So it's not a question of who, it's a question of we have an instrument that we can say, look, this is what we want.
Can I say something?
Alhamdulillah, yes.
What Rob said is beyond me. I would say it's beyond me too. This is why I got Rafal in there. I've been working with Rafal for more than 10 years, and we have got 4 or 5 papers together. The first papers I had was I'm talking about 2007 when my mom died. I met Rafal around the time my mom died. I met Rafal in a conference I had met him before 1999, and he asked me what I was doing, and I said I was working on participating mortgages. And participating mortgages it's a hybrid. It satisfies some of the Sharia Quranic verses, but it doesn't satisfy something. So basically, we wrote a couple of papers on participating mortgages, including one which was regarded as a workout. Once you have a default, basically a homeowner defaults, and then how do you restructure the mortgage? So we wrote 3 papers on participating mortgages. And then Rafal was chasing Bob Shiller, the Nobel Prize winner. So we wrote 3 papers with Bob Shiller, and 2 of them have been published. And these were on risk sharing. And Ubayya talks about, Prof. Ubayya talks about risk sharing in his articles. And so that was where the put option came in. And then I was pestering Rafal, we need to combine the 2 together. And he said the same thing as Prof. Bilal, it's beyond me. This is what Rafal was saying. So when I got started on this, I come back again to him. I said, you can do it. And he improved upon the model. What I had was a bit crude. So that's where we are. Thank you.
Can I just say something historical, not to do with this? The first time I met Prof. Shahid Ibrahim was in Harvard in 1998. There was a conference, Islamic Finance, organized by a friend in Qatar. Yeah. So it was on mortgage-backed securities, and that was a big topic those days. And ultimately, it ended up in the 2008 collapse, right? It was the beginning of that these mortgage-backed securities are being securitized, were being converted into bonds, being sold as investment bonds and all that. So that's my spin-off on 1998, year before 1990. But anybody, if your function is great, I'm going to study it and see what I can make out of it.
So Shahid, just tell us what exactly is you have a sukuk that is being funded by what companies?
No. The sukuk is paying a certain amount, the waqf is paying a certain amount.
So the waqf is putting in money into the project.
Right. Yes.
how much? Some amount.
Some amount is
Okay. And the sukuk holders will say,
yes.
and you need the workers to come in because it's a negative. So what's the role of government? Isn't there what governments?
Okay,
government.
Government facilitates land, government gives, what you call, provides guarantees on certain pricing of the infrastructure. And because you need to have the advance, you need to have what kind of pricing will be there. So the government provides that guarantee.
So the government can also give tax to it.
Yeah, no, this is
also equivalent to.
no. Government does tax incentive because it's a sukuk. I mean, it's a waqf, and waqf is not taxed at all. And the reason that the waqf doesn't negatively increase is because the waqf's goal is to serve society.
So how does it turn into positive? How does the negative and the turn into positive?
No, it doesn't turn into positive. The
Right.
waqf.
So how do you service this?
What's that?
How do you service this?
Oh, the service is being serviced by cash flows over time.
Right, but at some point there must be positive cash flow, right?
Yeah, there will be positive. The moment some periods will be negative, some periods will be positive, but overall it could be negative. If you take the discounted cash flows for the sukuk, it could be negative, and that's why we are having the sukuk rate.
Okay, and I'm just trying to understand. So if you bring in charity,
yeah,
of course it will make the NPV positive. But in such infrastructure projects, that's where the government is. Because these infrastructure projects are massive.
Oh, yeah, but the thing is,
they are very big and there's a social benefit to all. So that is why governments come in with taxpayer money to help.
A lot of Muslim governments have already deficits. They cannot pay it.
But this is where they can go in and put in their political land, all those things, and then raise ratios.
I saw something in the UK. Iskandar was there in the UK. We used to go to a mosque in the UK, and the mosque was provided by the British government to the Imam, who claimed to be, we called the mosque as a community center. Okay, and there was a mosque inside the community center. So the British government sold the property at a very reduced rate. And the guy basically, he was a very savvy guy, from Punjab, Pakistan. A very savvy guy, and he had a couple of mosques under, he was running a couple of mosques in Nottingham. He was running a school in Nottingham. He was running a junior college in Birmingham. So he had his handful, and all his khutbahs, all his sermons. I hope Saad doesn't get mad at me. All his sermons was, give me more money. But his Quranic qiraat was fabulous, and he was very, he was a bit very open-minded, that's what I like. But I didn't like his, he was very close to the British establishment, so I kept my distance.
So again, one more point. Second point is, why do you get a call? Because basically, if the both of them combine the business level, what that means is either one will get depending on which way valuation shows. Right? But there are many schools that have common value policy, but that it serves a certain purpose. For example, the food is there to protect the interests of the super. The issue, and the call is there to protect the interests of the issue. So if you want, I'm not sure who gets what.
Okay, let me share with you.
Do we have the time?
San is waiting, but make it quick, bro. Yeah, make it.
No, there's a diagram. Okay, there was a diagram.
Later.
Okay, I can share with you the diagram. Thank you. Sorry.
Dr. San, are you ready? Dr. San,
yes, Prof.
Okay, so now it's your turn now. You are the final presenter.
Great. Just to great. How much time do I have?
30 minutes.
For this? Great, thanks. Wonderful. Uh,
Okay.
thank
Dr.
you.
Saad,
Yes.
can we take 5 minutes for prayers?
Yes, absolutely.
Resume in 5 minutes. Yeah. Okay.
Yes, yes. Please take your time.
We can continue. Okay. Maghrib is 7:30. We can finish. Yeah, we can finish. Okay, Dr. Saad. Okay, we are set. All set.
Great. Thank you very much. Really appreciate the time you guys have taken out, and thank you very much for organizing this fabulous event. Am I audible?
All good. All good. We can hear you
Oh,
loud and
good. Great. Thank you very much. That's great. The idea of this paper, like some of my papers, came during a teaching session some years ago, where a student asked me, is cryptocurrency Sharia compliant or non-Sharia compliant? And a few years back, I had no answer to that question, you know. But from there, I started asking a fundamental question: what is the essential nature of money? Now, and what is it that makes something as money? That was the essential question that I was asking, and that's the question I would like to present today, predominantly focusing on Imam Ghazali's thought on the nature of money. Now, if you go to the next slide, please. This is an article we have. Can you go to the next slide? Now, what is it that makes something as money is such an essential point, because that it deals with all other issues regarding riba, regarding other issues of fairness from an Islamic perspective. If you clearly identify what is it that makes something as money. Now, in the interest of time, I would like to present 3-4 ideas, and then hopefully we can open up the floor for discussion. And I would like some serious thought on these ideas so that it will help me develop the points slightly in a deeper manner. So the first point that I'm interested in, is it the intrinsic value of the thing that makes money as essential? That was the point I was interested in. Secondly, is there an essential function that makes something as money? So these were the 2 points that I was very interested in, when I was approaching the question of money from an Islamic perspective. And both the points I was able to find in Imam Ghazali's thought, and I thought I should share both the points based on his reasoning and his thought. Next slide, please. The literature is all over the place when it comes to the idea of money. There is literature in economics, there is literature in ethics, and I work on the crossroad of economics, ethics, and law, and Islamic finance. So I was able to build on all these streams of literature. The primary argument in the economics literature is the efficiency argument, and the primary argument in the ethics literature is the idea of fairness. So efficiency and fairness are 2 ideas which are prominent in the 2 streams of literature, and so on and so forth. Next slide, please. Once the idea of money gets established, there's literature on Islamic economics as well that deals with the idea of money. Once the issues of fairness and riba becomes easier to understand well. Is it stuck? See the next slide, or can you not?
Dr. Saad, you have to
yes,
repeat
great.
what you said.
Okay, great. Yes. Can you go to the next slide? Yes. The methodology that was used to explain the idea of money in Imam Ghazali's work is neither empirical nor theoretical. Interestingly, it's neither consequentialist in approach or deontological in approach. The methodology, the way I was able to trace it, he had an inspired idea about the nature of money, which cannot be immediately traced back to any empirical phenomena. Neither can it be traced back to any set of propositions which he's trying to extend. He had an inspired idea, and then he corroborated it with the divine text. That was the methodology that I see in many other spiritual traditions, where they approach the idea in an inspired way, and then they are able to corroborate it with the divine text, with the Quran and the Hadith and other sources of Islamic law. So that was the methodology that I saw here. Next slide. Now, in the paper, I've examined Imam Ghazali's ideas from a multitude of perspectives. I have done a textual analysis of the passages which deals with the idea of money. But in this talk, I will only explore the primary idea that he's dealing with. Next slide. Next slide. Now, in the conventional perspective, the essence of money is defined in conventional finance. The idea of intrinsic value of money, or money needs to have an intrinsic value, is not valid predominantly in the literature. It defines the essence of money from its functions. That money needs to have three functions: medium of exchange, unit of account, and store of value and wealth. And that's how money is defined. So, and not from the fact that it needs to be a commodity with a certain form of intrinsic value. That's how. So the conventional finance, conventional economics for that matter, takes a very functional approach of what is the essence of money. Next slide. Now, this is interesting. Imam Ghazali also takes a very functional approach to the essence of money. But he argues, rather than calling it a function, he uses the word purpose. And he argues that there is an essential function which has taken the level of purpose, which means that it is more important in the hierarchy than other functions. And that function is medium of exchange and just unit of account, where medium of exchange is also at a higher ontological level than other functions that money is supposed to perform. So for Imam Ghazali, if the function of money, if something does not perform the function of medium of exchange, then all other purposes become secondary. Now, that was the essential aspect of the thought that I wanted to, that I came across. Secondly, and most importantly, let me go to the next slide and explain the most punchline of this paper. The most important aspect is that he recognizes that money should be a medium of exchange. He recognizes the secondary purpose of money as a just unit of account so that the pricing system becomes just. But most importantly, he does not recognize money's function as a store of value. Now, that's interesting. From a conventional finance perspective, if we take away this function of store of value, and he was very critical of the idea of hoarding, and he was very critical of any way if money is used to carry out wealth to the future in an exorbitant way. He was very critical of the idea of that. And this is one of the essential explanations on how money should be treated with. So he argued, apparently he argued that if someone has surplus wealth and surplus money, if he wants to invest, he should not keep that money as a form of investment and should immediately convert it into other possible sources of either real assets or other equity or other risk-sharing products. However, if money is to be kept in itself as a store of value, he heavily criticized that function of money. So what Imam Ghazali argued, that money should be kept predominantly, if you go to the next slide, in that he took a slightly Keynesian view of money, where money can be kept for precautionary needs or liquidity needs, but money cannot be kept as a form of wealth. And that's very, very interesting. I mean, and he argued, if money is kept as a form of wealth, you're taking the money out of the system. And his argument was, which was not very well developed in the passages that he explained, but the crux of the argument was, if money is kept as wealth, then two things are going to happen. You're going to deny the essential function of money, which is the medium of exchange. And secondly, he argued, if you start to keep money as wealth, then what's going to happen is you're going to take the money out of the economy, as a result of which there is going to be inequity in the economy. This argument is not very well developed. I plan to develop this argument further in one of the subsequent papers. But he is arguing that hoarding of money is the primary reason why prices become unjust in the system and why there is inequity of wealth in the economy. That's the argument he develops. If you go to the next slide. Now, there's good news and bad news. So coming back to the question where I started with, the question of crypto, and there is good news and bad news for it, based on Imam Ghazali's thought. Now, interestingly, recently I was part of a roundtable with some of the senior Sharia scholars, and they were discussing the question of crypto. And there's something strange I noticed in the conversation. Some very senior Sharia scholars were sitting, and I was also invited as an academic. Their entire conversation was, is crypto money or not? And I was very amazed. I said, that shouldn't be the question. The question is, should we recognize it as a financial asset, or should it be used as value? And they were you don't recognize it cannot be used as a financial asset. And that was the interesting argument. So the good news and the bad news for crypto, from Imam Ghazali's thought, from Imam Ghazali's perspective, since it has money, does not necessarily have to have no intrinsic value, and it takes its essence from acting as a medium of exchange. So if there is a digital asset with no intrinsic value, it can also be used as money. The bad news is, if it is not used as a medium of exchange, then it would simply emerge as a speculative financial asset, which is problematic in its nature. So until and unless it can only become a financial asset, if first widely it is starting to be accepted as a medium of exchange. So let me finish my talk slightly early so I can take more questions. I would love to take if you can, please feel free to criticize the idea, and please feel free to help me develop it. There are certain aspects of this idea which I'm still not sure about. I'm still trying to develop my thought there. And the primary purpose of this forum is not simply for me to share my ideas, but I would love to get some quality feedback from the audience. And who better to start with than Prof. Abaya as a discussant. So over to the group.
Assalamualaikum. Sir, can you hear me?
Yes, Prof. Walaikum salam. I can hear you.
Well, this is really not the kind of paper that I write, right? I mean, I'm not into philosophical things, and especially the work of Imam Ghazali. It's quite alien to me. I mean, not in the depth that you have gone into, etc. So I have a few questions really, and to further your own thinking, and you say you want to develop it further, etc. So my first question is, as I was reading this, I was getting this impression: are you reading too much into Imam Ghazali's thinking? I mean, are you coming to your own conclusions? And this is a problem we always have when they do Qiyas-based ruling. Because you're trying to figure out what is it that was said and spoken about 1,000 years ago, correct? And then that's where a lot of controversy becomes between scholars, the differences in opinion, etc. So I'm beginning to think that if there is so little written, or even if Imam Ghazali himself didn't explain so much, then how can you read into his thoughts? You see? So that was the first thing. I'd like you to think about it. Because you do say in the paper that he doesn't go on to explain many things, etc. Okay, then this whole idea of the function of money, and we all know it should be as medium of exchange, store of value, unit of account, etc. But here we see that you also put a lot of emphasis on this idea of Imam Ghazali saying there should be fairness. Okay, that money has to play a role of being fair. Okay, where did that come from? Because can a thing be fair? It's just a product. You see what I mean? How does a thing be this thing? So that is what does fair mean? Yeah, what does fair mean? And can you expect this pen to play a fair role? You can't, right? I mean, so that's what I'm trying to understand. And then that Imam Ghazali emphasizes efficiency and fairness are given. Efficiency is given, and the fact that it provides an efficient function itself is a social contribution. It increases welfare. Yes or no? Yes or no? Right? Because when you overcome the problems of barter trading, etc., it already increases welfare, increases economic efficiency, and all those things. So that's one big point. The second is you get into this thing about the argument that money has divinely ordained purpose. Right? Again, how do you explain that? You're saying the scholars feel everything has a purpose, and God has intended purpose in them, etc. But the point here is, should money also be required to have a divine purpose? You see what I mean? Okay. So it gets very tricky, and the later parts when you talk about monetary policy and all that, it gets even more interesting. Okay. Then the discussion about function must be performed with justice. So money is not simply a ruler that can measure, but a just ruler. So this is putting a lot of burden on the role of money. And how do you do that? Because money itself doesn't do things; it's just a product, as I mentioned. My third question that arises from all this is, how does monetary policy, and in particular behavior of producers, who manipulate things, etc., how does money play into all of this? Okay, and you say holding is unjust. Okay, is bad. Is it the fault of money that people hold? Right? It's not the fault of money, right? It's people who hold it. Okay? But even that, the other question I have is, when you say the implication in all these arguments is that holding is bad, but then the Sharia also says we should be prudent, isn't it? That we should prudent meaning we shouldn't spend unnecessarily. So it's a virtue. Wealth preservation is important according to Sharia, right? So how does that jive with the fact that you shouldn't hold money? Okay. So is that saying, the way I read it, it should be, is it bad to hold cash? But it's okay to use the cash and invest in land and building and all that to hold wealth that way. Okay? If that's what's meant, I think you need to clear that. But there's a good point there, because it's when you hold cash earns you nothing. And that's where the incentive to lend and earn an interest. You see what I mean? But if you invested it in a farm, in a business, in a building, you get rentals, you get profits, etc., then it becomes a return from a real estate. So that a real asset is created as opposed to holding money, which is a financial asset. And the only way you can make money from a financial asset is either you speculate with it or you lend it out for interest. So those are the things you may want to look at that for what you call it, furthering the argument. Okay. And then my last bit was, yes, the last part. Basically, the argument that when you talk about three entities, A, B, C, and if one wants to hold money, then what happens? Everybody is worse off, etc. But then the argument here is we buy a good or a product, okay, or a service because we want it for the utility we gain, not because we have the money. You see what I mean? So there's a big difference. You see? So whenever we buy something, there's a utility. And so, but the argument that seems to be in the paper is that you buy things because you have money. You see what I mean? And I don't think that is quite right. So are we saying saving is not a virtue? When in fact, what you call it, the Sharia wants us to be, to preserve wealth and all that. And finally, the last part is, I like the part on modern day inflation and Imam Ghazali's arguments, that the misuse of money, monetary policy tool, etc. And the argument that holding money can lead to deflation, which you mentioned somewhere, right? That actually did happen in Japan. Yeah, every time the government did fiscal expansion, people simply took the money and hoarded it, didn't spend. And the result was deflation. Yeah, so that is the case. But the opposite is the case in other countries, where every time you have fiscal expansion, you have lots of inflation, and you have every hyperinflation is caused by too much money supply. You see what I mean? So if you think of the Japan situation and the US situation, for example, with inflation, then yes, you can see the differences. Okay, that's about it. I think it's a very interesting paper. I only got it late yesterday, and it's 26 pages. I didn't do justice going through in detail, but I will read it more because I think it really kindles a lot of interest in me about Imam Ghazali. Thank you very much.
Thank you. Can I respond to some of if that's all right, Dr. Skandar, in the interest of time?
Yeah, go ahead, Dr.
Thank you, Prof. Abaya. Very useful comments. I mean, in part of presenting this paper, A was to basically to get a feedback that I'm not completely cuckoos, basically. Some of the ideas can be very cuckoos when you go to the stream of literature. So thank you very much for affirming certain ideas, and thank you very much for proposing certain improvements. Now, the first comment that you gave, coming to my own conclusion, I think that's a very fair comment, and I am it's something that I was wary of. So what I did, the approach that I took in this paper, I came up with the overall argument of Imam Ghazali, and then I actually copied all the text there, and then I started examining each statement, so that the reader, and I have not been selective with the text. The only thing I've been selective about is if there was a mention of money in the text, I've copied it from the original, and then I've presented it, and then I've gone line by line just to ensure that that the argument is well preserved. Having said that, there is a possibility that there is a room for slight of my own bias coming in, and would, if it can be pointed out, I would be happy to update it. I think that would be very useful. Now, secondly, you made a very interesting mention, and you said what makes a pen fair, and that's where the ethics literature is coming in, and so there is a natural tendency, and the simplest example I can give is a pillow can kill, but so can a gun. But a gun has a greater tendency to kill than a pillow. That's why we regulate guns and not pillows. So there is, and this tendency is irrespective of behavior. And this is important. That's the essence of the product, that there is a tendency which is, so the tendency to kill is irrespective of the behavior of the person. So even if I gave to a very, for example, if I give a gun to someone who is very disciplined in his behavior, still the probability that he can kill with a gun would be much greater than when he can kill with a pillow. So that was something interesting in the inherent tendency in the product. And that is one of the arguments Imam Ghazali is also arguing. Could there be inherent tendencies with money as well? And this literature is so fast. Read the literature on using gold and silver. Interestingly, in the fiqh literature, which goes back, they had one of the arguments that I came across was that gold and silver are natural money because they are the inherent scarcity, which has become the inherent nature of these metals, play a part. Hence, the products can become are inherently more fair ways of dealing with money, as opposed to there was something called a fulus, and this is something very interesting I came across. So gold and fulus had very different rules from a fiqh perspective. So a fulus was a metal of low quality. You could put any amount of currency. So, for example, I can put 1 dirham on fulus, which would mean that the quality of fulus is significantly lower than the amount that is put on it. On the contrary, gold and silver, their market value used to be quite closely hedged with the value that was put on it. So there's a very interesting debate. If I get a chance, I'll probably try to explore that debate as well. But then the argument arises, could certain forms be better money or more fair money given their inherent tendencies to behave in a particular way? So that's an argument. It's a very thin line, and I hope I can traverse that line. Efficiency itself is welfare enhancing, spot on. Imam Ghazali mentions that. He says that from barter, the natural use of money, it is there to serve the efficiency problem. Now, the question that you mentioned, money has divinely ordained purpose. I mean, that is at the heart, and Imam Ghazali doesn't mince his words there. He says money has a divinely ordained purpose. Now, how did he come up with that? So that conclusion is clear. He mentions it very explicitly, not once, but multiple times. And if I read his work, that's the methodology he has taken as well. He tries to identify the divinely ordained purposes, or the better word is the essential nature. He also calls it the essential nature. Now, this is going into the domain of philosophy, but he mentions that money has a divinely ordained purpose and the essential nature. And he tries, using some hadith literature, he tries to support his argument. So rather than supporting, since it's a theological question, he supports his argument using the Quran and the hadith rather than other notions of the behavioral aspect of money. I think that's a point I need to clarify further in the paper. That's very well spotted. That where do we and probably the next step would be building a mathematical model on it. What is the essential nature of money, and what is the comes from the person holding money? I mean, the person can have bad behavior, right? So what is essential nature and what is the holding aspect of money? I think that needs to be very clearly wealth preservation through money. Now, you've made an interesting point, and you have said holding cash is a bad idea. And I think partially that's also what Imam Ghazali is arguing. So for money and cash, he's probably using it synonymously. So holding money, and he's saying that holding money as cash, probably because at that time there was the money and cash, the distinction wasn't there. So wealth should be preserved, saving should be done, but not in the form of cash, actually. Yes, that's it. But in other forms of real asset. That is the essential argument that he's making. But he's saying, while you said that this is natural and this is something that would serve the customer better, why would someone want to hold money? And he's arguing if someone does it, then it is having a macroeconomic impact and also violating the purpose of money. So he building the argument. The Japanese example is interesting. It's worth quoting in the paper. So thank you very much. Very useful comments. Much appreciated.
The main argument that money should be in circulation, not be hoarded, I think that makes a lot of sense, even in conventional economic terms, right? And the whole idea of having to pay zakat if you, for example, gold, okay, if your wife was wearing the gold, you don't have to pay zakat. But if the gold was sitting in a cupboard somewhere, then you pay zakat. So what does it mean? Basically, the money should be put to use. Okay, so it jives with that argument. So, good luck. Nice paper.
Thanks. Very useful argument. Zakat, I think I need to add that as well. Yes, very well spotted.
Quick, yeah. 2 minutes, yeah.
2 minutes. So firstly, the form of money that you're focused on. I mean, I like the presentation. Also, money should be thought through from first principles. Because too often money has been taken just as a given. So it's great you're revisiting it. While I was listening to you, I realized that, money disappeared. It's a number on your computer now.
Yeah.
It's a digital number comes in. The form of money is vanished. So no one gets, no one sees cash. You go, you pay away, you get an electronic message, you have a salary came in, you mortgage deducted. So it's disappeared. It's just become a number. Okay, so it is a medium of exchange and a medium of accounting. Form has disappeared. Form is irrelevant. But I have a much more fundamental point to raise, which please factor in. Imam Ghazali passed away 111, okay, 1111. I discussed this with you before, so it's not fair to raise it again as if it's a new idea. But you remember, the role of money is completely transformed with the birth of capital. Because before capital appeared, you had a commodity, you convert it into money, which is some numerical quantity, and then numerical quantity became another commodity, fair pricing. So the market, by the way, without market, there's no fair pricing. Now, money as capital is completely different. Money starts, procures factory, procures labor, procures things, produces commodity to make more money. There's no longer money, although the form looks the same. It's like I start with $1 million. It's not money as you think. The purpose is to expand the money through the process of production. So that looks like money, but it's capital. And we can't expect Imam Ghazali to know what capital is way after his time, right? So now to me, the electronic form has evaporated the whole idea of form. Doesn't matter the number. Ultimately, gold, silver, whatever it was, with a number, right? With a number given to a use value, like a number to rice, meaningless unless you come to the market and number becomes corn. Number, so the number, right? So now it becomes pure number. It's like a number on your computer. Form is gone. Second thing is, we must differentiate medium of exchange, as you're saying, and pricing, with the form of capital, which takes the form of money. There's a whole different issue. It looks like money. And last year, you also raised, hoarding is bad because hoarding leads to interest rate. If I have cash and I don't make real asset, the only return I have is interest rate. And that becomes a great incentive to go for interest rate. So if you convert to real assets, that's a different issue. So I think hoarding ultimately is withdrawing from circulation and the propensity to go for riba. That's the only point I want to make.
I think last comment from Prof. Shahid.
I don't
Was
know.
the Mustafa comment? Yeah, okay. Yeah, Prof. Shahid and Dr. Mustafa.
Very quick this thing. There is an essay on riba by Hafiz Ibn Qayyim Rahmatullah. And he talks about stability of money. Money is something which is stable. So, I mean, when I look at cryptocurrency, it is very stable. So, I mean, if you look at, if you don't have that essay of, there are two classic papers on riba. One is by Hafiz Ibn Qayyim, but there is one more important one, much more. Both are important. The second one is by Ibn Rushd. Ibn Rushd also, he's a European Muslim, he used to be called Averroes, by Spanish Muslim. So take a look at that. And, when you talk about economic efficiency of money, Ibn Rushd points out the classic hadith of Bilal radhiyallahu anhu when he exchanges, low quality dates for high quality dates. Rasulullah prohibits him on that, and he says, why don't you sell your low quality dates with money and use the money to buy high quality dates? So, but those, if you don't have those papers, I could send it to you. My email.
Yes, thanks.
Thank you, sir. I have only two thoughts. So it's about the functions of money. So about the store value of money. Right? I think that's I'm just thinking, if you don't have the stored value of money, would you have then also, the other two options, the other two functions, medium of exchange and the unit of account? Because we have now the case with cryptos, right? It has no store of value. So is it then like, can we use it for other two needs because of that? So it might be the two other functions might be derived from store of value, to be honest. Another thing is the following. What also might be very interesting to look at is the following. So what were the discussions among Sharia scholars when fiat money was introduced? And are there any similarities with the discussions now among Sharia scholars about the cryptos? That's also something that we don't know anything about. So it would be really good to have a touch on that as well. Thank you.
Can I quickly respond? I think just one comment I would like to respond. The store of value is an essential.
Just hold on. Just one final thought.
Yes.
I'm just an observer. I'm not a distinguished scholar like all of you. But this topic was quite interesting for me, which is why I wanted it. I'm not sure whether you've referenced the conference that took place in Malaysia on the gold dinar standard. I think it was in somewhere in the 2000s, and it was primarily mooted by the then Prime Minister Tun Mahathir, and so on. And in that paper, in the conference paper, it goes through quite detailed this whole question that you are addressing. What is money? What is money during the time of the Prophet? And the implications of using stored value money like dinar and dirham and so on, versus non-dirham, non-dinar money. And it was clearly stated, I remember very clearly in that paper, that during the time of the Prophet, not only did they have dinar and dirham, but they also had tin, coins made of tin. And the implications were that you pay zakah on dinar and dirham, but you don't pay zakah on tin currency, the tin coins that you have, because that was not deemed to be of value and intrinsic value. So therefore, the Prophet ensured that zakah was only implied for dinar and dirham, and not for the tin currency. That became an implication to your point. When it came to fiat currency, it's paper. It's equivalent to tin. But Sharia scholars, as I understood, meant to say that we are now accepting zakah on fiat currency, and that's why there was a change then, right? And my thoughts about what you had presented was that during the time of Imam Ghazali, it was also during the time when it was dirham and dinar. And I cannot understand how he would want to deviate from such a currency that he was in use at this point of time to something which was like a different perspective of a currency where there was no stored value in it at all. So I don't see how that connects at all. And whether he was in a dream and he came up with this perspective of a currency that did not have a stored value. And those were my observations. I just wanted to share that. But I believe that if you have reference to the conference notes, it will really seriously help you a bit more in your paper. Thank you.
So you want to respond?
Yes. Prof. Bilal made a very interesting suggestion of money as capital. I think that's the next step. That's a big step that's going to happen very soon, hopefully, and that's part of the journal. One thing that has ended is this stream of literature has completely exhausted. It is not taken seriously. And part of what the journal hopefully may do is to reignite the stream of literature, which has kind of gone off serious discussions. So money as capital would be the next step. Prof. Shahid has given some two very interesting, I do plan to do a comparative analysis of other thinkers. I think it's of the essence. Part of what we want to do for our journal is the history of economic thought from an Islamic perspective. So it's not simply I'm not simply interested in what is the mainstream Islamic perspective. I'm also interested in what these thinkers on their own, what was their thought, which will help us develop the discipline of history of economic thought from an Islamic perspective. So it will be great to juxtapose the Ibn Rushd and Hafiz Ibn Qayyum. So thank you very much for pointing that out. The brother came up with a very interesting suggestion about, and very fair point, in terms of the value of money is one of the medium of exchange function cannot work if the money does not have value. Now, there are two things. Money needs to have value, but this value, and hence, if it has value, it becomes automatically the store of value. But the store of value is also an additional function, for example, which emerges if I decide to keep wealth for a longer period of time. It is a function which is there, but it is, if I decide to give my wealth away immediately, and if everyone decides to give their wealth away immediately, the store of value function becomes secondary, then I'll be storing wealth in other forms of assets. So that was while it's absolutely, the point he's making is very fair, that store of value function is part of it. But Imam Ghazali is saying that store of value function, since it's secondary in nature, it's part of it, since it's secondary in nature, hence it should not become paramount in nature. I think partially using mathematics at this stage would really help clarify, so that we are out of the words game. But thank you very much for pointing it out. I presented this paper in another conference as well, where a similar point was made, so I do plan to address it. The point regarding fiat currency was also, I've read that literature. It's very interesting. Fiat currency in economics, by definition, is something with no intrinsic value. So it's how we define it. If you read Randall Wright's work, they say we are not interested in what is the intrinsic value of money. It has no intrinsic value. Its value is determined by the market. So it is a commodity with demand, with limited supply, whose price is determined by the market. From an Islamic perspective, however, it was, and as the brother at the end mentioned, I've read some of that literature on the gold dinar, and I would like to reference it. But there's a fine point here, which is essential here. Imam Ghazali is making an argument on dirhams and dinars, and he's still arguing that intrinsic value is secondary. And that's very interesting. While the later scholars argued that fulus is what the 10 coins that they were referring to, the copper coins, that argument the brother made is very fair. But Imam Ghazali even extended the argument one step ahead and said even gold and silver, and this makes sense. For example, if I have a gold coin and I put 1 dirham on it, the market value is going to be very fluctuating, right? If I use that as jewelry, there is no way on earth you can create a convergence all the time, right? So market value of jewelry, of that essential, so the nominal value on top is likely to deviate from the market value. So that is something, and Imam Ghazali hence recognizes that and says intrinsic value becomes secondary. Now you are holding gold as money, and hence those rules should apply. So very interesting discussion. Thank you very much for that. Hopefully I'll try to bring in as many arguments into the paper as possible. But really appreciate it. Thanks.
Thank you, Dr. Saan. Right, so with that, thanks everyone. Thanks Prof. Bilal, Prof. Shahid, Dr. Saan, and thanks all the discussants and the remaining participants who are still here. Looking forward to see you all tomorrow, inshallah. All right, have a good day. Thank you.